Want to buy your first home in Minnesota, but you've got zero down payment? Well, what if I told you you could buy a home with, $1,000 out of pocket? Would you believe me if I told you that the state of Minnesota has down payment assistance programs that actually make that possible, where you can virtually have zero down payment, well, $1,000, and still buy your first home? I'm going to show you how that is possible in today's video. I'm Peter Lindquist. I'm a mortgage lender in Minnesota and have been for over 30 years, specializing in first-time home buyers. Stick around with me in this video and I'm going to show you how to buy with just as little as $1,000 in the state of Minnesota. Hey, if you like today's video, please be sure to give it a thumbs up. You know, it means an awful lot to me, supports the channel. Speaking of that, please subscribe to the channel. You know, if you're looking for your first home, do yourself a favor, get as much education as possible. We do a lot of it on this channel. And then add your comments and questions below. I'd love to work with you and help you out. We're going to look closely at the Minnesota Housing Finance Agency, also known as MHFA. So let's talk about first-time home buyers. What is a first-time home buyer? Well, obviously, if you've never owned a home, you're a first-time home buyer. But also, if you haven't owned a home and occupied it within the last 3 years, you're a first-time home buyer again. And that means that these down payment assistance programs are available to you. Now, even if you have owned a home in the past, MHFA has the step-up program, down payment assistance if you've owned a home before, and I'll touch on that a little bit later in this video. Now, the main reason buyers go to MHFA is for the down payment assistance. While MHFA offers loans, FHA, conventional, VA, and USDA, through lenders like us. They don't offer them directly to the public. They offer them through lenders. The interest rates on those are going to be a bit higher than what is available on the standard market, and it makes sense. You're getting down payment assistance, so you're putting very little money down. The state of Minnesota is taking a risk on you as a buyer and therefore charges a higher rate. They're taking a risk because you're putting less money down into the property. Now, it's important for you to know not every lender works with the state of Minnesota, especially the big internet lenders where you call and you're talking to a call center. So if you want access to this stuff, do yourself a favor and work with a local lender. Now, before I tell you how you buy it with just $1,000, let me tell you a little bit about the programs. They've got 3 different programs. 2 of them are at $14,000. 1 of them is at $18,000. Perhaps the most popular one is one of the $14,000 loans that is 0% interest, 0 monthly payments. It's called a deferred payment loan, and it's a loan. It's not a grant. So you have to pay it off when you sell the house, when you refinance, or if you vacate the house and rent it out, you owe it all at that time. Now, to be eligible for this program, there are maximum income limits, as there are with all down payment assistance programs. I'll put them up on the wall over here. For 2 people in the household, it's $85,000. For 3 people, it is $95,000. For 4 people, $106,000. And it goes all the way up to 9 people, which is, I think, $146,000. But don't worry, if you make more money than this, hang tight. We've got a program for you as well. This program has a couple of other features. It's needs-based, which means that you can't have too much money left over. And they define that as $13,000. So if you have more than $13,000 left over after closing, then you don't qualify. For example, you've got $50,000 in the bank, and after the down payment assistance, you need $6,000 to buy the home. You have too much money left over. Therefore, you don't qualify for this program. Another rule is that the monthly payment has to be more than 28% of your gross income. For example, if you earn $84,000 a year, that's $7,000 a month. 28% of that is $1,960. So MHFA's rule is that the mortgage payment, including taxes and insurance, has to be more than $1,960. More than 28% of your gross income, or you don't qualify for the program. And then this program is really designed only for first-time homebuyers. At least one of the buyers on the loan has to be a first-time homebuyer. And a cool little feature to this is that MHFA allows for non-occupant co-borrowers. That might be parents or siblings who don't live with you. but who are willing to co-sign on the loan with you and help you to qualify for the house. If we set up the loan that way, we don't have to count their income in the maximum income limits. Now, how does it work for you to buy the house with just a little as $1,000? Let's say, for example, that I tell you you need $20,000 to buy the home. And now you're getting this down payment assistance of $14,000. Now you have $6,000 left over, which you would owe to buy the home. But if even that is a problem, you can try to negotiate with the seller where the seller will pay money towards your closing costs. Let's say they pay $5,000 towards your closing costs. Now you just need $1,000 to buy the home. Isn't that crazy? So you could literally buy a $300,000 home with as little as $1,000 out of your pocket. Now, the second program is the Deferred Payment Loan Plus. That one goes up to $18,000. Hey, it's the same thing as the Deferred Payment Loan. 0% interest, 0 monthly payments, all those same rules. But they have 4 additional characteristics you need as a buyer to meet at least 2 of them. Now, one of them is if you have at least 4 people in the household. That's one of the 2 that you need. If you have anybody in the household who has a disability, now that's 2. And if you meet just those 2, then you're done. Or if you're a first generation home buyer, or if you're a single head of household with a dependent living with you, that would also qualify. So 2 out of those 4, and it goes from $14,000 to the Deferred Payment Loan Plus, which is $18,000. Now, the Deferred Payment Loan Plus has the same maximum income guidelines, but what if you earn more? Minnesota Housing Finance Agency has got programs for you as well, and that's called the monthly payment loan. So the monthly payment loan goes up to $14,000, just like the deferred payment loan, but it has an interest rate. It's the same interest rate as the first mortgage, and you have to repay it. You're repaying it over a 10-year time frame. So it does add to your monthly payment. But if that's the only thing standing in the way for you to become a homeowner, are you willing to have a higher payment for those 10 years? That's where this program comes into play. That program's easier too in that there's no maximum asset level. We don't have to worry about that 28% of your gross income. So easier to qualify for. And a little known feature is you don't have to pay it off if you vacate the house and rent it out. So I've had people who figure that 4 or 5 years from now, they're going to rent out this house and go buy another. Then the monthly payment loan would be the appropriate loan for them as down payment assistance. Now, the income limits are much higher. It's for 2 people, it's $139,000. And for 3 people or more, it's over $159,000. Now, I'll note that the income limits I'm talking about here are the Twin City metro area. Outstate all has availability for MHFA programs as well, but the maximum income guidelines are a bit lower. So please reach out to me and I'll be glad to go over that with you in your individual circumstance. So Minnesota Housing Finance Agency divides their loans into 2. There's the startup program that for that one, you have to be a Minnesota first-time homebuyer. And then there's the step-up program. And you know, that was originally designed for people that are selling and moving up, but we commonly use that program when our first-time homebuyer earns more and needs the down payment assistance. All 3 of these programs can pair with startup programs. Only the monthly payment loan can pair with the step-up program. So if down payment is your only barrier to home ownership, MHFA has a potential answer for you. And I really want to tell you, if you think you don't qualify, reach out. The mortgage world is not necessarily logical, and the way you might be thinking of counting your income, we may be counting it very differently. So reach out to a lender who does Minnesota Housing Finance Agency financing and offers all of their programs like I do in order to determine whether or not you qualify for their programs. And that incidentally is how you get this money. You've got to apply with and get your loan through a lender who offers Minnesota Housing Finance Agency financing. You're not able to get your loan from one lender and then just the down payment assistance from one of us who offers MHFA financing. No, MHFA requires that you get both loans from the same lender. Hey, thanks for taking the time to be with me today. In our next video, we're going to talk about national programs and how they are available in the state of Minnesota as well. Please subscribe to the channel, and I look forward to seeing you in the third video of our series.